I now recognize the ranking member, Mr. Sherman, for 5 minutes.
Some have said that sometimes the system doesn't fund somebody's business idea. I would say that's actually a good thing. Most ideas shouldn't be funded. I have a dozen ideas every day, most of them bad. And if you take a look at the bills submitted here in Congress, most of them shouldn't be passed. The chairwoman says that there are millions of companies that are private that should stay private. Couldn't agree more. But there are a few dozen, just a few dozen, that we should encourage to become public, that are large enough to easily deal with the costs of being a public company. If these companies become public, then we get more information about them, both in terms of trying to look at our society, but also for investors. They can afford to do it, and then the retail investor can get the liquidity of a publicly traded company, the information, the analysis of a publicly traded company. We're here trying to decide whether to, in some cases, liberalize or in some cases tighten the rules for what it is to be a private placement or a non-public offering. We dealt with one of those this morning, changing the definition of accredited investor. Boy, a whole hearing focused on that. Doug, can you identify one other proposal that you would have to liberalize or to make tighter the rules here for private placements?
Well, for private placements, I think there's several proposals before us in terms of increasing the caps. If you're talking about me to freewheel and come up with a new idea on rules to make private placements better.
I don't say it has to be your original idea. Pick one idea you like, even if most ideas you steal from somebody else.
I think we all can take a collective pat on the back for what we did in the Jobs Act in 2012. I mean, I think that is directionally what we ought to be doing.
I now want to go to Ms. Thornton. You might have opposed the Jobs Act. I voted for it. I didn't think it was perfect, but I think it's done relatively well. Can you identify a specific one or two ways in which we should tighten it a bit without eliminating its basic concept?
Sure. Thank you, Congressman Sherman. I think one of the most important things would be to change the holder of record definition, because in the Jobs Act, it was increased from 500 to 2,000. And when this 12G, Section 12G was enacted in 1964, there wasn't a whole lot of difference between shareholders and holders of record. But over time, because of technology and so forth, holder of record can now mean one holder of record could be an intermediary that holds tens of thousands of shares from thousands of investors. And
now,
that's
it's one thing if you have an investment fund. I mean, Berkshire Hathaway might own a piece of a company, and we'd count that, I would think, as one shareholder of record, because they're really making the decisions, even though I might own a share of Berkshire Hathaway stock. But in a circumstance where, I've got an account at Merrill Lynch, so do 100 other people, they all have invested, we're all making our own individual decisions. And you're saying that if 100 Merrill Lynch customers are all in a stock, that it could be identified as one holder of record?
I believe that's right. And the thing about this threshold is that once you go above 2,000 holders of record, the company has to make significant public disclosures. And that's as it should be, because they're obviously a big company. This is the way that Facebook remained private.
And we might just set dollar amounts. Say, we don't care if you only have 50 owners. If you're worth $500 billion, you can afford it. We want the information. Your shareholders might benefit from it. And also, we are trying, in some cases, to push public companies in the right direction. I know what's controversial is ESG. What's probably less controversial is an idea I proposed on the floor yesterday, and that is for companies to disclose and analyze how they'd be affected if we had a breakdown of our relationship with China. Because there are a lot of companies out there, what should I say, pre-balloon in their thinking. So there is a benefit to companies going public when they're big enough to deal with the costs, and I yield back.